Chinese regulators have announced that a preliminary investigation has found that Nvidia, the US-based chipmaker and a leading player in artificial intelligence hardware, violated China's antimonopoly laws. The violation relates to Nvidia's acquisition of Mellanox Technologies in 2020, an Israeli company specializing in high-performance networking and data center hardware. The probe was initiated in December 2024. China's State Administration for Market Regulation, SMR, says Nvidia did not fully comply with conditions that were attached when China conditionally approved the Mellanox deal in 2020. While this is a preliminary finding, SMR plans to extend its investigation. No penalties or fines have yet been announced. Potential fines under Chinese anti-monopoly law could range from 1% to 10% of Nvidia's revenue in the previous year if violations are affirmed. Nvidia's stock reacted negatively to the news, with drops reported in pre-market trading. Trade and tech tensions. This move comes at a sensitive time. The US and China are in ongoing trade and diplomatic negotiations. Technology, especially semiconductors and AI chips, features prominently in those talks. China's action against Nvidia adds pressure in a landscape already charged by export controls, national security concerns, and competition in AI capabilities. Access to Chinese market. China is an important market for Nvidia. Reports show that its Chinese operations contribute a substantial slice of Nvidia's revenue, though export restrictions, from both the US and Chinese side, have already dampened some of that. Regulatory leverage. By citing a past acquisition and alleged non-compliance with conditions, China seems to be using regulatory mechanisms to exert leverage. This may be both about enforcing the letter of antitrust law, as well as signaling to foreign firms about the costs of operating under China's regulatory framework. Technology decoupling and self-reliance pressure. China has been pushing for more homegrown AI/hardware technology, partly in response to US restrictions. Moves like this investigation may feed that broader strategy. What's unclear and what to watch. Final outcome. It's not yet known whether Nvidia will face fines, structural remedies, or other penalties. Scope of violation. While the condition breach is cited, the exact nature of how Nvidia allegedly failed terms, which parts of the conditions, what actions or omissions, is not detailed yet. Chinese response to export control deals. Recently, the US government made arrangements allowing certain exports of AI chips to China, subject to licensing and revenue sharing. How China's regulatory actions will interact with those agreements is yet to be seen. Impact on Nvidia's strategy, particularly how Nvidia manages its product lines, e.g., the H20 AI chip developed for China, supply chain, and partnerships in China given both regulatory and political risk. Implications. For Nvidia, regulatory risk, potential financial penalties, reputational risk, and possibly constraints on future acquisitions or operations in China. For US, China tech relations. This could harden China's stance during trade talks. It may also discourage foreign firms from assuming they've met all regulatory obligations simply by securing conditional approvals. For the semiconductor and AI ecosystem, companies that rely on Nvidia chips inside China or elsewhere might face uncertainty. Chinese firms may accelerate development of domestic alternatives. For investors, such investigations, especially when tied to enforcement of law over large, high-profile deals, tend to create market volatility. China's preliminary finding that Nvidia violated its anti-monopoly laws over the 2020 Mellanox acquisition is a major development in the ongoing tech rivalry between the US and China. It is simultaneously a legal/regulatory matter and a geopolitical lever. The outcome of the investigation will likely reverberate far beyond Nvidia, influencing how companies approach strategies, compliance, and market access in China, especially in highly regulated, high-stakes sectors like AI and semiconductors. That's today's TechTide update. Drop your thoughts in the comments. And don't forget to like, share, and subscribe for more daily tech news.